In this episode, my friend Bryan and I discuss what he's doing with his family with the infinite banking concept. Interesting man, interesting story, and great conversation. So I hope you enjoy. Thank you for listening. Welcome to the Banking with Life podcast. My name is James Neathery. I'm your host, and I'm as excited as I can be today to have my friend Bryan Mulvany on with us today. Very interesting man. He's just, I think maybe you've been practicing this concept for about a year, formally with the infinite banking concept, but I'm telling you, Bryan has a great story. He's a real life individual, family man. He's been doing family banking for years prior to us meeting, and this helped him put form into it. But I want him to share who he is and his story. So thank you for coming on, Bryan. How are you this morning?
I'm great, James. Thanks for the opportunity. I'm excited to share with you. You know, I really enjoyed watching you and Ryan on the internet, and excited to have the opportunity to just kind of share my story with others.
Oh, perfect. So if we back up, I think we've known each other for about a year, a little over a year.
Yeah.
So prior to that, how did you discover the infinite banking concept? I mean, how were you exposed to this idea?
Sure. Well, my story actually begins all the way back in about 2008. I'm a normal person here in Ohio, live in Ohio. My wife's a school teacher. I've been in the IT industry for over 30 years, and we're just normal people. Didn't come from money. You know, it wasn't desolate or anything. My wife was from a family with 8 kids, so they were constantly, battling at the table for food, right?
Right.
But we're just normal people. And we had 4 kids. And in 2008, where we were in our lives was our first child had graduated college. We had 1 in college, 2 still in high school. And I've always been a planner. I'm always looking out 5, 10, 15 years, especially where finances are concerned. And so I got to thinking, what are we going to do when we no longer have to pay college tuition? And eventually we're going to pay off our house. And what are we going to do with that money once we don't have to spend it on those things anymore? And so my idea, or my goal, was to try and find a way to help our kids. As parents, we all want our kids' lives to be easier than ours. And so I was looking for some way to try and help them. And so I got this idea that, 4 kids plus my wife and I, that's 5 families. We're paying interest on mortgages, on cars, all these different things. If we could find a way to funnel that interest into ourselves, into our own accounts instead of a bank's accounts, then that would be a great thing. And so, again, clear back in 2008, I started working on a spreadsheet, worked on it for several years. How might we be able to do this? And came up with an idea, just a concept. If we could ever get to the point where we could amass a set of money, our kids could then borrow from that money. Again, my concept was it would be borrowing, right? This isn't about giving them a gift, but it's about allowing them to borrow the money, pay the money back. They would probably be able to pay less than they're paying to a bank, but they're still investing in the future generations of our family. So that was kind of the idea. I had, a spreadsheet all together, that kind of laid this all out with, what mom and dad are going to put into the bank and what each kid's going to borrow and what they're going to pay back. And I'm in IT, right? So I'm a spreadsheet kind of guy, and I'm a math major to boot. So I love the numbers. I love the finances. So I had that together. I was just looking for what was the right vehicle. I didn't know exactly where I could do that sort of thing. At the time, I was thinking, well, maybe this thing called a trust. I've always heard of a trust. My family never had trusts, but maybe I could do that through a trust. And so I talked to some lawyer friends of mine, and the more I learned about trusts, it didn't really seem like it was what I was looking for either. And so to be honest with you, I had kind of set the idea aside. I had said, I can't find the right mechanism. I'm going to kind of stop looking at this. And my wife and I decided what we would do instead. This was probably 4 or 5 years later, maybe in 13, 14, something like that. We decided we'll just create kind of an early inheritance for our kids, right? We'll give them a gift, they won't have to repay it. It won't be as big, as the vision, right? But we'll do something to help them take care of a bill. And so I was in that process. We were doing these early inheritance payments to our kids. And then one night, I was on the internet. I don't even remember what I was looking at, but I'm pretty sure that the first video I saw was you speaking to a bunch of, I think they were real estate investors, where you went through the whole concept and you described to me all the things I had lived. We invested in IRAs and 403Bs and 401Ks right from the start. In our 20s, again, math person, financial person, we started right then when we had no house, we had no car payments. So we had invested in those things, but my money had been locked up for 40 years and I couldn't use it. And you told me why. You got to explain that to me. And I thought, man, this makes all kinds of sense. And then you started talking about infinite banking, and I said, there it is. That's the thing I've been looking for. That's a way that we can set this up. We can. The other thing, I'd invested in the stock market, so I understood the ups and downs, but that I knew that wasn't where I wanted to be. It's just too volatile. But when you talked about 100-year-old insurance companies, who've been paying a dividend for 100 years, maybe it's not 15%, but it's not 1% or less than 1% that you get in a bank account either. So I thought, well, that was what I was looking for. And so the first thing I did was, can't remember, I don't think I got on your website at that point because I wasn't sure whether I could trust you yet or not. So
sure. Just some guy talking on the internet, right?
And there you go. So I think I went to Amazon or something and bought Nelson's book. Yeah. Read through Nelson's book, and then the next thing I did was I found your series, your review. I think it's 6 different podcasts on the different chapters or the different sections of the book. And, I was in, hook, line, and sinker. This was what I was looking for. So then I reached out to you and haven't looked back since. As you said, a year ago, I just had my 1-year anniversary on our first policy. But I've already started to look at not only a policy on myself, but also, of course, a policy on my wife. We're about to turn 59 and a half, so we're about to enter the golden decade, I think you call it, golden 12 years or 13 years.
It's a magical.
When we have access to that money, and my plan is to move it. It's been doing what it's been doing, but we're going to move it into our own bank. We're going to create opportunity for our family in the future. I've already begun to talk to my kids about this concept. I haven't inundated them with IBC and all the terms, but I've said, right. I've introduced the concept of what if we as a family, right? We got 5 families. You know what a mortgage is like. They all have a mortgage now, so right. They get it, right? I can show them you're paying, 90% interest, not that 3% the bank told you. Right. So what if we as a family could capture all that interest for future generations of our family? That's how I introduce it to them, because, they're still young, early 30s, mid 20s. And so I don't want to overwhelm them, but I wanted to give them a concept that they could kind of latch onto, and they could see that this is not just for me or just for them, but it's for generations of our family. So I started that process. They've all kind of understand that much of the concept, and I've ordered starter kits for all of them, and we'll be having this I already had the conversation with my oldest. He and his wife are fully on board, and so the next thing, I had reached out to you recently, and the next thing I plan to do after my wife's policy and my policy is set up, as Nelson describes in his book, to do this generationally. It's the grandparents' responsibility to set these up for the grandkids. And that's what I plan to do.
That's an even distribution of age classes. I believe page 70 or 71 in Nelson's first book, Becoming Your Own Banker. So thank you for letting me say that. Now keep going. I love it.
Okay. No, I love it too. This is, like I say, this is what I had been looking for. I just didn't know what it was called. I didn't know. It's interesting that I didn't know about it either, because you talk about yourself being in the insurance industry for a long time before you ever heard about it. My father was an insurance agent. That's what he did. I had whole life policies way long ago, and so I understood cash value. I understood the difference between term and whole life, and I had experienced that, and I had seen the growth. And what I did, though, a while back, is when I decided how am I going to do college education, I had cashed in all those policies and decided that wasn't the way I was going to do it. Sure. Because I was ignorant, right?
Well, did you have some encouragement from, and I don't want to throw anybody under the bus, but I bet you couldn't have spoken with one single financial guru who would have disagreed with you at that time. I'm just saying.
Yeah, you're probably right. I'm a person who tends to trust his own judgment over others. So to be honest, I didn't go looking for advice. That's what made sense to me. And so I moved in that direction. But when this came full circle and it came back to life insurance, perhaps I had a little bit of a benefit over some people in that I didn't necessarily have a negative impression of life insurance, right? Because I had that experience in the past.
I got to say, Ohio, has a rich history of life insurance companies. I'm not saying that they all still exist in Ohio, but Ohio has had a lot of mutual life insurance companies domiciled there. So I'm glad
I didn't know that.
Yeah, I'm glad your daddy was an agent. So keep going.
Okay, so
and he was probably a pillar in his community, right? I mean, there wasn't
never met a stranger. Never met. Right. He was a born salesman. Which for me, I'm an IT guy. I like to sit in the back office. I don't really care to be out in the spotlight, but oh my God, my dad was completely the opposite. He's one of those fathers. Did you ever have a father who, when you went to a restaurant, you knew where you were going to be embarrassed by the time you left because of the way he teased the waitress? You know what I mean? And you're thinking, oh, Dad.
Yeah, I had one just like that. Yeah, I had one just like that. Yeah,
exactly.
Yeah. And they loved him, right?
Oh,
the waitresses,
100%.
They loved him.
100%. Everybody loved him. Yep. So again, my plan, policy on myself already in place. As soon as we have access to those other funds, open up a policy on my wife, max that out right away once I'm 59 and a half, and then begin working on the grandkids. Now, what I plan to do with my kids is educate them, have them read the book. Before I'm even going to talk to them, they have to read the book. And then educate them on the fact that if they're doing something, they're probably all doing something related to their retirement, additional retirement plans, IRAs, 401k, all those traditional qualified plans, as well as those sort of plans for their kids. What I plan to do with the kids' policies is my wife and I are going to put a certain amount in every month. And then I'm going to say to my kids, now, this is what this looks like if only Grandma and I participate. But if you guys want to participate too and match what we're doing, look what this can do for your child by the time they're college age. So I hope to involve them that way so that they can kind of redirect whatever they're doing for college education into this vehicle. Because again, this vehicle doesn't have all the rules that 529 plans and all those things have. We can use this for anything we want, and we can use it. I have grandkids who are not even one yet. So over the 22 years we're going to be saving, we can use that money to purchase other things that we have to purchase anyway. So that's my plan for grandkids. And then for my kids, I'm going to just educate them on this is an alternative to that 401k, that IRA that you guys are doing for your retirement. We can do it this way and educate them. I mean, the real power to me of infinite banking is you can use the money while you're saving the money. And you can pay yourself back the interest instead of a bank so that it grows even that much more. And I'll tell you, those illustrations that you guys ran for me on the grandkids, they were very powerful. I mean, when you consider 5 grandkids, the starting death benefit for the 5 grandkids at just a few, $100 a month, it's just really powerful in terms of what that could do and the security that it gives your family, to know that you're covered, if some disaster should strike and, something bad should happen to someone in the family, finances aren't going to be an issue. And the last piece to my plan is, I had 3 brothers. I'm the youngest of 4 boys. And one of my brothers unfortunately died a number of years ago. And his 2 children still live here around me, in Grove City, and I have a brother who lives here. And from time to time, they aren't the best with their finances. They're young, and so there are times when they kind of need some help. And so another thing.
They may listen to this podcast. I'm just saying.
There you go. You never know. But my plan, now I'm going to have this conversation with them, is, would they be open to me taking out a policy on them, so that if anything they each have a child, right? So they have a child, they need to worry about, well, what if something happens to me? And neither one of them are in a position where they could afford life insurance of their own. They aren't really, into financial. The financial aspects of their life aren't priority, as for many people. And so I'm gonna. That's another thing I plan to do. The more I think about this, the more I think, I want to wrap my mind around income equals premium, and I'm trying to wrap my mind around that. So I know that long term, I'm going to want as many policies as I can to put as much income as I can into those policies as premium. And so I saw this as a perfect opportunity to, provide for them, right? If they have financial needs in the interim, then I can help them. I can take loans from their policy. We can pay it back. I can help them with that. If something were to happen to them, we'd be in a position to help their child, with their ongoing finances. So that's another thing that I plan to do in terms of our family bank. And that's as far as I am so far in my thinking, but I'm sure, more will come.
Oh, that's very good. I mean, there's, I just have to say that there are insurability limitations and requirements. So I'm just speaking in general and factually that there has to be insurable interest, for all of us to be able to purchase life insurance. So there are issues that have to be dealt with and worked through. And then the idea of premium equaling income, if you extrapolate what's going on in the all-American family, Nelson said himself, every time you have income, it goes into someone else's bank. And that's not, where you started, right? You've been doing this for about a year. And they're all worthy goals, and it's a correct direction, in my opinion, to go to create a system of policies where you and your family can control the banking function. And I'm very proud of you. I commend you. You're leading the way by example. I mean, I came from a family with 4 children, right? Some of us got it by osmosis, and some of us it took longer than others, and then too, I'm 56 currently. The older I got, the smarter my dad became.
No kidding.
When I was 20, I'm like, yeah, I know everything. Yeah. When I'm 25, it's like, I don't know as much as I thought, and he knows more than I thought he did. By the time I'm 30, it's like, oh my gosh, he's a very smart man. By the time I'm 45, I'm like, I wish he was here.
Yes.
But the premium equaling income, that's a worthy go in the correct direction. That's not where you started. You've been doing this for about a year. Now, in general, I don't want to disclose any numbers or anything, but what has your experience been in this year? And two, really, I should back up even before that. But since I asked that question, let's look at that. What's
Sure.
your experience been? Have you been, did the policy or the life insurance company meet your expectations? Have you been disappointed? Is it about right on? Was it difficult? I mean, just share a little bit of your experience over the last year.
Yeah. Super simple. I'm an online banking kind of person, so I had to fill out a couple forms, but set up monthly withdrawals from my checking account to pay the premiums. Once I set it up, it just happened. No problem at all. And as far as performance, like I said, I just had my 1-year anniversary. So, and if I compare the performance of the policy with the illustration, it was spot on.
Did you do any loan and loan repayment activity in the first year?
I did not in the first year, no, but I'm planning to do that here very soon at this point.
But you had it. If you wanted to, I mean, you had the ability to do that.
Yes.
Right.
Yeah.
So, okay.
100%.
You're not waiting for anything other than for your own particular reasons and
Right. And another thing I haven't shared just yet is, again, in my desire to have access to this pot of money that I had been saving for 40 years, a few years ago, like maybe 3, 4, 5 years ago, I set up what's called a solo 401k.
Oh, yeah, they've been really popular in the last several years.
And so if you're familiar with that vehicle and how it works, I was using that to do my own banking, right? Because through that mechanism, I could borrow up to $50,000 and repay myself. Same concept, generally. And so that's what I had been using even when I started Infinite Banking. So, and I've been taking all kinds of loans and repaying myself through that solo 401k for a couple of years now.
Right. And then, so great point. You can bank with anything. I remember that now that you bring that up. The solo 401k. I mean, you can bank with anything. Banking because banking is a process. It is not a product. But as Nelson discovered in 1980, he was a life insurance agent since 1964. Okay. So, and he'd been paying high premiums, I say it many times, $18,000 a year in 1980 is what he had been paying.
Wow.
All right. That's a substantial premium. And then and he was a real estate investor, he liked real estate cash flows, leverage, and other people's money. And when things went wrong, he clearly seen that life insurance had more characteristics of a banking entity than it even does life insurance. So my point being is you can bank with anything, no question. And there's never a problem, Brian. There's never a problem until there's a problem. Yeah. And then, then it's like when there is a problem, when the tide's up, everybody's swimming beautifully. When the tide goes out, you see who's swimming naked, or you see who's not really fishing. Anyway.
That's great. Here's the way I like to say it, James, is the way I view life is, as I said, my wife and I didn't come from much, but God has blessed us. And the way I view it is God provides us with the resources, and it's our job to distribute them. And we're open. Right now in Ohio, everybody's going through a really tough time. My wife right now is out delivering food. That's what she does. She takes care of people.
Right.
And so I just see Infinite Banking as a way for us to continue, spreading around God's blessings and teaching my kids. It's not so much teaching my kids because I think they have that in their heart, but it's giving them the resources, giving them the means to be, unusually generous in their adult lives.
Sure, absolutely. I've said, here, this is the 27th. Is today the 27th? I should know what date it is.
I think it's the 28th, yeah.
Okay, so here we are at the end of March. All across the country, we've had this shelter in place with many states, for the last couple of weeks, which I understand things are going on in the big wide world. There's a real virus. I get all that, but I don't necessarily agree that you have to beat down the local economy, lock up the local economy. However, I'm just saying all that to say this, that the infinite banking concept, this idea of controlling your cash flows, controlling the banking function in your life, is the antithesis of what's going on in the big wide world today. So it's just so happens, this our ability and opportunity here to speak today, in this current environment, I think is even that much more powerful. And so I got to tell you, I'm a numbers guy. I'm not I'm a very detail-oriented individual, but I'm past the numbers when it comes to the infinite banking concept because I've done this personally for 15, 16 years. The companies that we work with do what they say they're going to do. We can count on them. We're not hoping that they do what they say they're going to do. We're not practicing on you. So having said all that, I did look at your numbers before I sat down, okay? And we use, and I've said it many times, an illustration is an illustration. It's wrong as soon as you print it, and it is because, just what you do or don't do has a greater bearing on the results of a policy than even the life insurance company. We can't control the dividend scale. We can't control the interest rates. We can't control the markets. We can't do any of that. All we can do is control what we can control is what we do and the attitude in which we do it in, all right? But I got to say that the illustrations, we use them in my office to educate. Here's an asset. Here's a relationship to the numbers. This is why we built the policies the way we built them. And this is we don't just build them willy-nilly. We have detailed conversations to understand you, your family, what you're trying to do, and then we handcraft them, we customize them, and we're very proud of that, on purpose, with intent, and then it's implemented, right? We go through the underwriting process, and it's got to get past the underwriter, and it's got to be issued and delivered, and then it comes into application. You're paying premiums until you're going to do something that you were going to do anyway, and then here it is, the clock rolls over 12 months later, and by golly, you get an annual report, right? Because these are guaranteed products, you get annual statements, not quarterly statements, right? So it's about as exciting as watching paint dry, looking at a life insurance policy. However, and you can attest to this if you've done it, when you go online and you look at your, values, they're going up every year. I mean, every day. Every day. And so, long story, but before I walked in and sat down, I just looked at your numbers so I wouldn't be ignorant. And we keep the original illustrations as a reference point. I call it checking for figs. The life insurance company said that they were going to do this. We said and planned on doing this. Did we do what we planned on? Did they do what they planned on? And I got to say that the results of your values are greater than what was originally illustrated.
Yes.
That is why, my friend, you own that particular company, which I'm not going to name and I don't want you to name, but they do what they say they're going to do. What a concept today in the financial world. Yeah,
100%. 100%.
And then your wife delivering you food?
I don't know who it is, but I'm sure they're here to pick up something, but they're just going to have to call her or something. I don't know.
Well, prior to being introduced or exposed to the infinite banking concept, when you were doing the family banking type of thing, and you were, talked and considered a trust. I mean, were you just using, or were you using just savings accounts, checking accounts before you brought in the solo 401k, or?
No, before that point, James, it was just theory. It was just something I wanted to do in the future, because even if you look at the dates in that spreadsheet that I shared.
And I can bring that up, if you'd like. I can
sure
get Andrew.
That'd be great.
If you have it in front of you.
Yeah, I do.
I have it in front of me. I think Andrew could put it on the screen later so the good listeners can understand what we're talking about.
Okay. So if you look at this spreadsheet, the first few columns, it has the year, and then it has ages, mom and dad's age, what mom and dad are going to contribute into this family bank, and then what the balance. And you see that header on column D, trust balance. I was thinking maybe the trust was the way this would work from the very beginning. But again, I didn't envision it starting until about when it ended up starting, because my wife hadn't retired yet. I still haven't retired. We didn't have our house paid off, all those sorts of things. This was always a future plan. Like I say, I'm a 5, 10, 15-year planner. But then if you notice, the next set of columns, they go in threes. There's 3 columns, then 3 columns, 3 and 3. And each one of those represents one of our kids. It shows kind of their ages, how many loans and how much they would take as a loan and how much they would repay. And down at the bottom, you can kind of get an overall feel. So this plan, and I went through hundreds of different versions of this plan. How much can we help our kids? Can we just help them, a little bit or a lot, and how does that impact the overall growth of the full family bank? And so this is what I came down with, a way to help our kids to the tune of, $500,000. I mean, to me, that would have been really helpful, right? I was just starting out. So if I could help my kids, $500,000, they have skin in the game. You'll see that they are paying back more than they borrowed, et cetera, et cetera. And you can see the growth, of the overall bank there. And so again, just conceptual. I wasn't really doing this per se, but it was just kind of my dream of I'd love to be able to do this someday. And the other thing, if you look back up at the top in the upper right-hand corner, these were kind of my overall goals right there in blue or green, whatever color it shows up. I wanted future generations of my family to be able to begin to take these loans as early as maybe 30. And I thought about earlier, but then I thought, no, it's kind of like what you just said. People ask us all the time when they have teenagers, what's up with these teenagers? And I say, it's okay. You're just in that period of time when you get dumber every year. But just be patient. Be patient, because once they turn around 22, 23, 24, all of a sudden you're going to get smarter every year. You're going to realize you really do know a few things. So my thought was that age of 30 is specific. It's not that the plan couldn't support them doing it earlier, but they wouldn't really be ready earlier, if you know what I mean. It's kind of good to let your kids struggle a little bit, right? Let them figure out that, that the world isn't so easy. So anyway, enough about that. I wanted this plan to be able to make all future generations financially independent or debt-free by age 45. And the other thing I noted about this plan was, you notice that I have them stop their contributions, around age 60. Well, they don't need to stop their contributions, right? If they continue contributing to the policy, just imagine how big these numbers could get for our family, and generations to come if we continue to fund it. And so again, infinite banking is infinite. I look at some of those numbers and I think, the sky's the limit. It's just as creative as Nelson said, the only limits on infinite banking is your imagination. What can you imagine for your family? What can you imagine in ways you can help others? It's about family first, certainly, but for me, it's also a way to help other people when they need it.
Sure. Well, if you don't have the ability or the means to help other people, you can't help them.
Exactly.
It's as
100%.
simple as that. And so as you were, conceptually, several years previously, and being a spreadsheet guy, which I am not, I know some of the best Excel ninjas in the country. I'm not. I didn't create this. I didn't have any. You were telling me what you were doing, right?
Right. Yeah. 100%.
Right, because the numbers are the numbers, and the numbers really, in my opinion, don't matter unless you understand the concept. But then when you understand the concept, the numbers really don't matter, right?
100%. Yeah.
But it's your money, it's your family money, so it's important. And there's no question. And I'm as simple as basic as, here's the original illustration. This is what we intended to do. This is what the life insurance company said they were doing or going to do. And now here's the annual report or the annual statement. Do they match? We're checking for figs. Right. And if a tree doesn't bear fruit, you got to chop it down. Right.
Right.
Okay.
Right.
So going back originally, and when you constructed this and had this vision and this concept, you had to use some numbers, even with a trust, right? You had to use some kind of a rate of return. And then, there's no life insurance, there's no death benefit with any other account other than life insurance. All right. And now if we're talking about generational wealth, family banking, and I got to say, the banker can do whatever he wants. If the rules are no loans until 30, then those are the rules, right?
Right.
And so, did you ever calculate, or have you ever calculated or included the death benefits in your machinations in your Excel worksheets?
No, I haven't. I mean, that just creates exponential possibilities, right?
Right.
Because it's like I said, when you gave me illustrations on, my grandkids are less than 1 to 4 years old, and you gave me 5 illustrations that created death benefit immediately of over $1 million for our family, I was blown away. And again, I'm not talking thousands of dollars a month to implement that. I'm talking hundreds of dollars a month, and so that's what really blew me away. If on this little spreadsheet that I brought up here, I I'm a very conservative person, right? Very Irish, like to hold on to my money.
Hey.
In this, I didn't really point it out, but way up at the top of this spreadsheet in row number 2 in blue, it shows the trust interest rate that I was assuming, which was a modest 3%, because I'd much rather, assume low and what's it called? Under promise and over perform. Yeah. Right. So
must be 30-year treasuries there, 3%. Oh wait, yeah, they don't even deliver that.
Yeah, exactly. Right. I thought I was being conservative, but not conservative enough in today's world. That's for sure. But no, I mean, you're right. The death benefit just explodes. The possibilities explodes the security that your family has when you consider if disaster were to strike. At least finances wouldn't be an issue.
Yeah, there's no question that's if we graduate prematurely but if you look at what you're doing, you'd be generation number 1. You have all the money. Generation number 1 has all the money, and I'm talking about even distribution of age classes in Nelson's book, Becoming Your Own Banker. Right, and he says that, which what you referenced earlier, you should buy policies on the grandchildren, skipping your children. Right. Right. Well. Your generation number 1, when you load up on you and your wife, then jump the next generation and then lead the way and they get involved. I mean, if you look at just what you're doing, you're already looking at 3 generations, right? So if you own policies on your children and you and your wife graduate, the ownership transfers to the children. Right. And the first thing they're going to do is change beneficiaries, because currently you would be the owner, they're the insured, you'd be the beneficiary. And I'm not giving life insurance or legal advice to anyone. I'm having a conversation with my friend Bryan. Okay. And y'all are just welcome to listen in if you'd like. I'm not telling you to do anything other than educate yourself. All right. Discover the infinite banking concept for yourself, for your own family. And go to the horse's mouth, Nelson Nash, and everything else that pops up on the right side of YouTube, all those recommended videos. Go to the Nelson Nash Institute, get the 10-hour seminar that Nelson produced, and start there. And then, of course, by all means, stay on our YouTube channel. Okay. All right. So
it's great stuff.
It is. My point being is, you have policies on your children, right? When you and your wife graduate, everything that you've accumulated while you've been walking around on this earth is left to another individual, someone else, your people, preferably, if you've done a good job. So it goes to your children and your grandchildren. And then the policies that you own on the grandchildren go to the parents, right? Of the children, your children. Right. The first thing they do is change beneficiaries to themselves, right? And then whenever they graduate, they transfer the policies to their children, your grandchildren. And so we're not even talking about the 4th and 5th generation that are not here that you've laid the groundwork for. And now calculate all that value to the Mulvany family heritage, in the future. Yeah. You can't. 100%. It's a beautiful thing.
I like, and I've been a person who, I don't need to be rich, right? I don't really want to be rich, but I don't mind knowing some of the secrets that the rich know and use. Right. And so I always wondered, what are these people who have billions of dollars? What do they do with that money? What do people like J.C. Penney, Walt Disney? And then I learned through my education of infinite banking that they had insurance policies. And some of those, they had points in their life where those insurance policies made a difference, between them kind of failing or having the massive success that they've had over the years. And for me, that was just one more piece of evidence that solidified for me that infinite banking was the right thing. It was the thing I was looking for.
Until a year later, you still agree that it's the right thing?
100%. Full steam ahead as quickly. And I wish I could turn 59 and a half today. Right.
Well, that's very powerful. I didn't know you were Irish, but Mulvany, of course you are, right?
Yeah. Yep.
So, I always say if it wasn't for alcohol, the Irish would rule the world. Which I'm Scotch-Irish, so I'm not, disparaging my people. I love us all. Right. All right. Well, anything else you'd like to share with us, Bryan, before we part ways? Do we leave anything out?
I don't think so. I just would like to thank you. Somebody has to lead the way. Somebody has to be that first person, who carries on in the footsteps of a legend like Nelson Nash. And I appreciate the fact that you recognized what he was teaching, and that you are continuing to share that with others. Because if it hadn't been for you, I wouldn't be where I am now. I wouldn't be realizing, these dreams that I've had over a decade for my family. And like I say, I can see that this is going to become so much bigger than even I can kind of wrap my head around right now. So I appreciate your efforts to continue to spread the good word, and I'll continue watching the podcast for sure.
Well, thank you very much for saying that. My commitment has always been to do my part. That was my commitment, from way back, and pushing back the frontiers of ignorance. Nelson and I used to joke all the time. He got that. I got that from him. But then the positive side of that is expanding the frontiers of knowledge. It's a worthy goal. It's a worthy 100%. Cause, and, very passionate, and it's worth it. I get to meet cool people like you, and I get to know what you're doing and your story. And there's really more about your family that's very cool that we did not get into. What you're actually financing and what you have financed. Very cool. So, Bryan, thank you for sharing with us today. I appreciate you and all your kind words. Okay?
Well, thanks for having me on. I appreciate it. Have a good day.
You too. Thank you. Bye-bye.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.